if you skipped other videos, please don't ever skip this one, because this is crucial. This will change the entire game, as far as trading is concerned. So please don't skip this one. Just watch it to the end, and I know it will change you. So we want to talk about money management and risk to reward. So we want to talk about money management and the risk to reward. So let's say you are, let's say you have 10 suites. Okay, let's say you have 10 suites, and then this is so if you have 10 suites, meaning you are a seller. Okay, and then comes 20 people, okay, that wants those suites. So this is what we call demand. So what it simply means here is you will fail to meet this demand, not because you are not a good businessman, but because the demand, okay, but because the demand was bigger than the supply. You understand? So you failed to meet the demand because the demand was bigger than the supply. So what am I trying to say? In forex trading, you will lose money. That's a guarantee. So when you get into the forex market, you will know that it's not every day where you will be profitable. There are times where you will lose money. There are times where you will lose money. So what makes us lose money in forex is what we call the law of supply and demand. Okay, so it's what we call the law of supply and demand. So there is no strategy in forex market that is 100%. And if you want to win in the forex market 100%, just quit forex and try other thing. Okay, so what makes those losses is what we call the law of supply and demand. Okay, let's say the market is moving in an uptrend. Let's say the market is in an uptrend like this. Okay, it's in an uptrend like this. Then it breaks the previous lower high. So the ideal situation here is we're expecting a supply zone here. We are saying now there are sellers here, so we expect this market to come back to this level and then be rejected here, okay, and be rejected at the supply zone, and then continue with the downward movement. This is the ideal scenario most if a market prints something like this. But now what happens is, if the demand here, if the demand for this particular pair, let's say we are trading gold, so if the price come to this point and the demand here, the demand for gold is more than the sellers in this place, if the demand exceeds the selling pressure, the market will break this level here. So meaning this supply zone will fail to hold the buying pressure, and then the market will break here and continue with an upward movement. So meaning if you had placed your trade here, if you had placed your trade here and placed your stop loss here and expected that the market will hit your entry and then continue to go up, it means that you would have lost this trade. So you would have lost this trade not because you are not a good trader, but you would have lost this trade because of two things. Number one is because we are just retail traders. We don't control the market. Okay, number one is we don't control the market, and number two, the law of supply and demand. So that thing, guys, you have to know that when you enter the trade, there are high chances that you can lose. Why? Because of the law of supply and demand, and because you don't control the market. But what makes us profitable in the forex market now is what we call a risk to reward. Guys, so I mentioned, if you skipped some of my videos, please don't skip this one, and don't forget to subscribe to this YouTube channel, share the video with your friends, like and leave a comment as well. So what makes us profitable in the long run is what we call the risk to reward. So before we talk about the risk to reward, let's talk about what we call take profit. Okay, so take profit is the amount of money you want to make should the trade goes in your favor. This is what we call take profit. Then stop loss is the amount of money you are willing to lose. You get that? The amount of money you are willing to lose, provided the trade the trade goes against you. So let's say the market is moving in an uptrend like this. Okay, so if you enter here, you put your stop loss here. So this is the amount of money that you are willing to lose. So you are saying if the trade goes against my direction, this is the amount of X dollars that I want to lose. So you set your stop loss here, and then you set your take profit here. So take profit, you are saying the amount of your take profit is where you want to exit the market. So if you set maybe let's say your TP here, if you set your TP here, okay, so this is where you are saying if the trade goes in this direction, this is where I want to come out. So this is very crucial. This is the first step that makes you to be profitable, to be able to set your take profit and to set your stop loss. So risk to reward makes you profitable in the long run. Okay, so for example, let's say we set a risk to reward of 1:3. So I trade a risk to reward of 1:3 only. It's a 1:3 and upward. So 1:3, 1:4, 1:5, up to 1:10 or 1:20 if it's possible. I don't trade 1:2. I don't trade 1:1. The reason is, now let's say if you risk $1 and you want to make so if we say risk to reward of 1:3, you are saying if you risk $1, you want to make $3. Okay, this is something like that. So meaning if you are trading a risk to reward of 1:3, if you risk $3, okay, you want to make how much? You want to make $9. So you are saying, in case I lose $3, I want to make $9 if the trade goes in my favor. Okay, so this is an example. Let's say you have 10 trades. Look at the power of what we call risk to rewards, guys. So remember, we said in the forex market you will lose some trades because of the law of supply and demand, and because you don't control the market. But this is how you make it in this industry. Number one, let's say if you lose 6 trades out of 10, okay, you place 10 trades. So if you are risking, let's say, $1 per trade, and you out of 10 trades you lose 6, so it means that you would have lost $1. So out of 10 trades you would have left with how many? 4 trades only. You would have left with 4 trades only. And in those 4 trades, remember, you are saying you are losing $1 to make $3. So meaning in those 4 trades, we say 4 by 3, you would have made how much? $12. So imagine, out of 10 trades you lost 6 trades and you won only 4. But because of the power of risk to reward, even if you lost 6 trades, you still managed to come out with how much? $12 in the forex market. So you still managed to come up with $12 in the forex market. This is a beauty. So meaning the more you have a trading capital, the more amount you make. Let's say you are risking $100 per trade, and that's a risk to, let's say you are risking $100 per trade, and in a risk reward to 1:3. So meaning if you are risking $100, you are aiming to make $300. So in this case, let's say you entered out of 10 trades, you had 6 losses. So meaning you lost how much? $600. $600. It's bigger. But imagine, out of those 4 trades, only 4 trades that you won, you would have made how much? $1,200. So this win automatically covers the money that you lost in the market. Understand? This win automatically covers the amount of money that you lost in the market. So in the long run, you become profitable when you are trading in the market. This is how you win, guys. Now there is one guy that said something that changed my trading journey. I think it's called Samuel Etochi or something. Samuel Etochi. He said, in forex market, it's not about whether you are wrong or you are right. It's not about being wrong, it's about or being right. But he says it's about how much money you make when you are right versus how much money you lose when you are wrong. Simple. That's the simple thing. It's about how much money you make when you are right versus how much money you make when you are wrong. So for instance, in this place, we were wrong 6 times and we lost $600. But we were wrong, we were right only 4 times and we made how much? $1,200. This is the beauty of forex trading, guys. So I hope you found this video valuable. Please don't forget to subscribe to my YouTube channel. I believe I'm helping somebody, guys, just to show your appreciation. So Intra Forex signing out.